Welcome back. I'm August CPI. This is Joe Elker, and this is the Gold Spot. Well, we have some interesting news developing coming from Saudi Arabia, really big in the Wall Street Journal, and maybe Joe, maybe you can enlighten us as to what's going on with oil prices and what's going to happen with gas prices.
As we're seeing lots of economic news coming out, the next big challenge for, really the world, the Fed, is the $100 oil problem. This week, or basically starting in July, you've had Saudi Arabia and Russia restricting production of oil. It's starting to impact things in a great way. And we're just seeing BRICS nations continue to gain more power. And so when we look at Saudi Arabia and you see when oil prices get over $80 a barrel, it really changes the dynamic of the world as far as money lending, and the amount of money Saudi Arabia makes just goes through the roof. And so many things are going to be changing. Higher gas prices are definitely on the way, along with rising costs everywhere.
One thing that came out in the journal also was that Saudi Arabia has now become a hard money lender to some of the nations that can't get money from other nations because of poor credit or whatever the case may be. So they are making so much money that they're able to also dole that out at high interest rates, which is very interesting. But more importantly, I think, is really what's going on between Russia, China, Saudi Arabia. This is all part of the petrodollar that we've been talking about. It's becoming very top heavy for our nation because we're on this quote unquote war against fuel and all we want to try to stick with is renewable energies. But it's really starting to make everybody feel this. I mean, imagine what people that are in the middle, the lower middle class right now what it would feel like to them if all of a sudden gas prices surged to $7 per gallon for just regular. I mean, I think that one of the things that we also need to take into accountability is what's going on right now with the paycheck to paycheck lifestyle for people that are making under $150,000. There was a survey done through the Quicken software, which is the most, by far and away, the most highly used software out there for taxes and also keeping books. They showed that over 32% of Americans right now that are making under $150,000 a year are paycheck to paycheck. I mean, think about it, $150,000 a year a few years ago, right. We're not talking about ancient history, was a lot of money. You were doing very well at that price. Now 32% are paycheck to paycheck. That's a staggering number. Now, the actual credit card debt, Joe, where's that at right now?
Credit card is now at all-time highs, over $1 trillion. Household debt, just in general, is over $16.5 trillion. So the pressure is continuing to build.
$1 trillion. It's actually 1.031 the last time I checked, is where our actual credit card debt for, this is just America's credit cards. This is how much debt they have incurred. Now think about this for a second. You have rising prices across the board. Remember, gas is not something that is factored into CPI numbers when it comes to the rate of inflation. But it sure does impact absolutely everything you buy. It doesn't matter what it is, consumable goods, across the board, everything's affected by that. Now, we were talking about the different stages of inflation. And this is another report that you guys would probably want to check out, which is called Currency Collapses. It talks a lot about hyperinflation, but the different stages of inflation are interesting because at one point in time, normally we have what when we start going down there? The strikes, right?
Right.
So maybe you could tell us a little about what's going on in Detroit.
Well, we're starting to see, labor markets get upturned. So the auto market's a perfect example with the auto strikes going on. And we're just going to continue to see more and more stress as, the middle class starts to feel this. And it's not going away anytime soon. It's really just going to get much more difficult.
Well, I think the things that people need to realize is strikes are very easy to motivate people to strike, especially unionized workers, when you start seeing the cost of everything rising. their day-to-day lifestyle is being impacted huge. A lot of our clients don't feel it right away because they've done well, they might be in retirement years, they've got nest eggs, but inflation is trickle up poverty. The lower end of it always feels it first. Because if you're for instance somebody that's making $35,000 a year, how in the world do you live in today's world when your grocery bill, every time you go get a little basket of groceries, and your grocery bill is $100+ I mean, you and I can both remember $100 when we were, say, $20. What would that get us?
You'd fill up the trunk of your car, the whole back.
All day long.
Yeah.
I mean, it would be 1-2 weeks worth of groceries, easy. And that's just, I mean, that's just our, I mean, it's not like we're old men sitting here talking about war stories back, during the Great Depression. This isn't ancient history, and this is something that people need to realize is not slowing down.
2 years ago, you could eat at McDonald's for $5. Now it's $15.
I very rarely find myself to McDonald's, but the other day we did stop by one. It was one of those situations where I was like, okay, it was like I forget what it was. It was like a $36 bill. It was a $36 bill. I was $36 at McDonald's. Yep. I haven't been to McDonald's in years. So when I went there, I was floored by it. I mean, what these prices are. And that is also another number that's not in the CPI, is your food numbers. Have you recently gotten, say, a notice from one of your streaming services telling you that your prices are going up, your APS bill, being your electricity bill, all of these bills continue to rise, and then all of a sudden the people that are also, maybe working for you have to do some plumbing on the house. You call a plumber recently? Through the roof when it comes to how much it costs to get somebody just to come out to take a look at the problem. So overall, I think that there's a few different reports that you guys definitely want to take a look at. One, the big one that we just did was modern monetary theory. Maybe you could tell them a little bit about that.
Well, it plays into what we're seeing right now in a big way, because really what we're seeing unfold is repercussions of just basically print to infinity. So the modern monetary theory is something that you request a report, you'll learn a lot, it'll help you feel more comfortable as a foundation for what's happening, but it's very helpful.
I also think that you might want to check out the petrodollar. That one is one of our most popular. If you haven't seen it already, definitely something you could click below to see that. Also, one other that I think the currency collapse that we haven't really talked a lot about recently, but it talks about how things unravel. And I think you're going to find that past events have very interesting parallels to what's happening right now.
More than ever, I think we're seeing especially like how these reports, the different sectors they cover, everything's tying together right now. Everything is coming together.
It really is. I think that what we were talking about, it really is more of a socialistic outlook on monetary policy. Yep. And the one thing that it really seems like the system that we have today, they're trying to replace it. But in order to replace it, you got to get rid of what's already there. And you're not going to be able to vote on it. Just like when gold was confiscated, no one was allowed to vote on that. When we went off the gold standard, no one was able to vote on that. This was just things that happened. The politicians pushed it through and got very little kickback along the way. So these are all things that are happening right now, and I think that you should be more educated, and more than ever today, buy gold.
It's time to be aware and be educated.
Absolutely. That's it for us today. Thank you so much for joining us. We're going to see you next week right here on the Gold Spot.